Hello everybody, I'm Isaac. Today I'm going to take you through a S&P liquidation trade. This one specifically is a liquidation after a P profile, so after a short squeeze. So on the bottom right down here, we've got the daily candlesticks, just to give us a bit of context. So the market made a low here, came down, made another low, and then has sort of been bidding up. Now, if we draw around these, we kind of get a P profile, right? And you can see that again here, if I draw this over the profiles, we have a P profile here as well. And so, coming off a low, then that generally suggests that the trade is a short squeeze. So that's kind of the big main context here, right? This P profile. Now, what has happened here is that, and I suppose what made it a little bit tricky is that the Friday, the week prior, the market sort of ticked the highs of this range. The Globex session, like all sessions, is trading right up to here. And then it sold off a bit, and then made this base. Again, this low, which was on the Monday, which was a US holiday, also a UK holiday. Then the very next day, the Globex session, the all sessions bid, with cash opening then outside of this P profile, so above it. And then on the open, basically had this test higher, and then drive back down, creating the selling tail. And so, basically, my thought here was that this is a really congested support level here. We have this poor low here, and now we have this rejection here. So, I suppose the thing to remember here is that if this is a P profile and a short squeeze, well then most of the people buying are buying to get out and cover a short position. But people who then, go and try and buy and play along on here, maybe have misread the market and are thinking that they're buying with people who are accumulating, but that's not necessarily the case here. So this selling tail, at the highs kind of tells you that, all right, this upside attempts failed. Now we have sellers in here, and we likely get a liquidation back through. So really, I was thinking, okay, potential is that we can get as low as sort of these lows. It didn't have to be in this session, but that was kind of, what I was thinking. And then basically, it's the fact that this is weak, and then we have this, and that's against this tail. So we've got this sort of like really strong rejection of the highs and these weak lows. That's what gave me the confidence to, play the short. So that's where I thought that the edge was for this trade. I've got a 30-minute chart here just to kind of show a bit more detail. You can see here, and the point of this really was just to show you that level that I circled. So that's one. You can see how many times, including in the sort of all sessions, that level got tested. And then here is the low from the holiday. And so those, you can quite easily see how, okay, this market should be able to, come down and test these levels. Okay. So that's basically it for the summary of like the outline of the trade. So if we go over it again, the market's formed this multi-day P profile suggesting a short covering. The market has got poor support and the week's lows, so the lows from Monday were made on a US holiday. And obviously that came with like low volumes, and so therefore you can't really suggest that the buyer, whoever made that low, was a really big, strong buyer. The market opened above last week's highs, and then it completed the option to the upside with a tail. So, if you took the combined profiles for whatever it was the past 8 days or something, you had this, you then have this rejection at the highs, and so now, you're looking for a trade back through. And so that's the liquidation. So basically it's a liquidation of anybody who got long in the P, so anyone who was accumulating. Okay, so now we've got the 1 minute chart. What we're going to look at, we're going to look at this trade in 3 places. 1, the trade entry, 2, the offer, and then 3, making the low. Now, one thing that's important about this that maybe wasn't so obvious here, but maybe more obvious back here, is that level where I got short, the entry is here. So the significance of that being the fact that it's last week's highs. So this kind of like pinky purple line is the Globex high, so the all sessions high, and the yellow one's the cash. And so then I thought, all right, somewhere in amongst that zone, if the market's gone up and now holding back below, then it's rejecting trade above. And so that was the significance of my entry point. And then after that, it was really all price action. I was kind of looking for this trade to come down, a bit further than it did. But then the fact, just like the price action was really my trigger for everything. So, all right, one last look at that. So basically we're going to look at my entry up here in that zone where the prior week's highs were, then the offer, and then how it made the actual low. Obviously you can see it did test lower again, and then it did come down lower again, but this is like a quick, fast move after that. This isn't really great stuff for trading, right? Most of the move's done and kind of all the edge is gone, right? The edge was getting short higher up, and trying to sell and trade all this at the bottom is not all that good. You can see here I tried to play another leg and got stopped out for a few ticks because it just felt wrong to me, and that was kind of when I knew it was time to stop. Okay, so let's get into the ladders before I talk too much. Okay, 1 second. All right. So these two, this is the SPU up here, and you can see here 17.5 and then 15.5. They are the two highs of the week. So cash is the lower one and the all sessions above. So if we just have a look at the price action here, hold on, this seems really fast. Oh no, that is right. Okay, so we've got just really small lots trading, there was lots of ones. We came up there, I think there was a 200-ish lot that traded up there. 31s, 74s, 41s up here at 17.5, 52s. Okay, then you've got lots of small lots, 20 lots, 44 lot, 31 lot, 66 lot, up there 80 lot, another 80 lot, 100 there. And so you can see, we're not having any really big clips come through up above these highs. And so that was one thing, that I was thinking at the time. You can see the market's pushed above now, and I think 11s was the biggest bit of size that went through. So the market's pushed up again, sort of 72s that time, again absorbed. So it's not really being able to drive away from this level. We're not seeing very many big clips go in. So again, I think it rotated up as high as 18.5s. There was 140 lots. So it almost seems like we're getting more bigger selling back into the 17.5s. Okay, so then 4, 5, 7, 9, 1 sold, 4s, 8s, 2s, 44, 10, 37. So again, still not really any size there. And so whatever's getting traded was being absorbed kind of in this zone here. Okay, and so now the market's pushed back below, and so you can see that now I've realized that, okay, I probably should have gotten short already, but yeah, now I can have my risk pretty much up there. And so I've gone short, and I don't want to see the market rotate back up there. So something that would get you out would be the market coming back above that 17.5 all sessions high, and then seeing size coming in and at market actually being able to hold a bid. So you can see, okay, the market's pushed back up there now, but we've got to see, all right, can it even get above there? And no, it can't really. There was, it was trying to buy at 17.5, and then a really big offer came in at 17.25. So right now this is looking good. So we had that absorption zone up there. There wasn't really, everything was being absorbed by the sellers, and there wasn't really any big clips going through from the buyers. Okay, so the market's still auctioning around this level, but now you can see it's holding back within last week's range. So again, just having one more go. And so that was all getting absorbed there at sort of 17.75. Okay, so now we're thinking, all right, we've seen absorption here and sort of like questionable buying, and now we're really just wanting to see, okay, can this market, will a seller step in and start to drive this market lower? And so now we're seeing like the market being able to rotate a little bit lower, but as you'll see, we're going to skip a little bit before the real selling comes in. So at the moment, we've just kind of understood that, well, we've got this bearish bias here. We think this could be the high, and now we've just got to sit with this and let the market develop a little bit, until we find out what happens. So, okay, I'm going to skip now into the next bit of the recording. Okay, and you can see, so if we look on the 1 minute chart, that's where we got short up here. And so now there's been maybe 10 minutes since. The market's still, you can still see the price. So we're trading a bit lower. Basically, there's all the volume that's traded so far, so right at the lows of that for the day, and obviously back within last week's range. Oh, I didn't realize I did that. Go away. Okay, cool. Yeah, so the market's trading around the 13s at the moment. And we're really looking to see like evidence of a seller stepping in. We really want to see this market start to drive lower. So we've got 20 lots that were traded there at 13 3/4. Now there's 180 lots bought there. All right, so there's just like some really small trades. There we go, 65 lots sold. Then about 200 lots. So now the market like found a little bit of pace. It was just like really sort of stall in the pace of the auction there. Okay. Right, so there's a bit of buying again, up to 13s, 125 lots into 13 1/4. And the market then sells 100 lots at 13s. All right, so we're still like trading in this block, and we're really looking for an acceleration. Okay, so 100 lots at 13s again. 33 lots sold. Okay, so still trading around the 13s and the 12 3/4. And you can see here that we've got these kind of lows now. So on the 1 minute candle, we've got these kind of congested lows. So really an acceleration through here will be a change. So we're still really waiting to see that. And there we go. So there we go, pop through there, triggered some stops quite fast. Okay, so then there was 300s sold there at 10 1/2s. And we can see a lot more size and a lot more flow, like it's picking up quite a lot, trading down to 09s. The auction pace is like totally changed. There was sort of 180-ish lots traded there into sort of 09 3/4, another sort of 200 lots. So the auction's definitely quicker. All right, rotated back there up to sort of 10s. We have 250 lots traded there at 9 1/2s. And so far, this is looking pretty healthy. Like we had stops, and then a bit more of a drive, and the market's still, holding. This pace is still there. So back to 10s. A little bit of buying. You can see there was a couple of 100 lots absorbed at 10 1/4. 260 there at 10 1/2. All right, and then looking to see if this market can go a bit further. Okay, so now the market's driving back down. So it's held around this sort of like this zone up here, the sort of 10s to 10 1/2s. And we're sort of really like now, with the price action, right? We're looking at this offer. So, there was the stops move originally through there. The market's then kind of held absorption in that zone and then driving lower. So we really just want to think about like how this is playing out. And so, right, the market keeps like offering at the lows really. Okay, and then again, look down a couple more prices. So now trading in the 7s. Right, now the 6s. So you can see this option's really picked up pace here and has been quite aggressive now down to 5s, 4s, 3s, and then pulled back to the 4s, back down to the 3s again. So starting to get a little bit of, sorry, I should get rid of that, a little bit of two-way down here. Okay, and so you see I can also, it's a shame we can't see my mouse, but I got out down here. And the reason for that was, so as I drew before, that there was that stops move. So we had this kind of like congested lows on the 1 minute, and that's where the auction was a bit slow. We came through on stops. And then the market like pulled back a little bit, had a bit of absorption, I think which was around the 10s. And then it went and went and went and went and extended. And so it had gone quite far, and just like looking at how it was, I thought, okay, like we've probably taken all of the easy ticks out of this move now. And then once we got after that extension, there was a rotation back, rotation, really quick on the ladder. And, after such a big extension, I suppose the auction, at least in the very short term, was telling you, okay, I've gone a long way, I'm extended, that was the easy stuff done. And so that was when I got out. Now what we're going to look at on the next, in the next bit here, which is just like a couple of minutes later, we've got now that area where I think it was the 3s and 4s, like the market just was rotating back and forth. And you can see it's done that now for 1, 2, 3, 4-ish minutes. So the candlesticks, well, there's a big offer. There's a few more like that. And now we're like that. And so we want to really judge, or want to kind of understand when this auction really is finished. So because I said, we had the stops, absorption, and then another drive. And so that feels, well, you'd think it feels like an exhaustion move, but actually, like the market was able to hold at those lows, so there's still something else like potentially going on. So we're just going to look at trade now at the lows. So the market's coming down to the lows like those 3s, and we just want to see how it trades when it goes through. So there was 240-ish lots there, a couple of small clips going through, 150s I think was there, maybe 260s, pushed back up now, 200 lots there, 3s. Now the market's gone. So what happened just then, and it's quite hard to see because it's fast, is that the market then, we've got these lows from the 1 minute candles. And so the market then went through that low and had a few, like the few bigger clips got absorbed. So there was a couple of 150 lots. And then the size was quite small. And the market just pushed back above. So I call that one like no one steps in. And this is like, somewhere that's been auctioned, at least in the short term, quite a bit. And then the market goes through. But there wasn't any new selling interest and stepped in. We didn't see like someone going 300 lots selling 300, selling another 300 or something like that. We just had like a couple of 150s and then nothing. And so then the market pulled back above this. And at this point, you've really likely made a short-term low. And you can actually see that I have gone long after that as well. So the market's come back, and now I think it's probably likely in the short term the market's going to have a little bit of a squeeze. There's obviously all these people now have positioned at the lows, but we've had at least a short-term auction failure through the lows. So now the market's likely to squeeze. And you can see then my stop is back down, like kind of down here. So if that's that 1 minute line, don't want to, that's kind of like, it's okay if the market comes back down. It's just that I don't really want to see it back down lows. But anyway, that's kind of irrelevant. That's not what this is about. We really just I wanted to sort of explain how, I determined that that would be a low, which was the fact that the market broke the bottom of those 1 minute congested candles. And when it got to the other side, we didn't really see any change. We didn't see a big seller stepping in. And so, and so then that was my kind of cue to go, all right, this move, we've had this extension, now we've had this little short-term auction failure, now I think the move's done. And that basically is that. let's just go back to the slides. And so, yeah, that little piece there that we just watched is this. And yeah, that was that failure. Okay. So key takeaways. So what did we see here? So I think what's really key about the profiles as opposed to candlesticks, if we just go back to that concept of the P profile, the multi-day P profile, is that it helps to answer kind of like the how question. So like, you know, candlesticks can tell you the what question, which is that, okay, the market traded down, made a low, and it's now traded higher. But one of the things that I don't think it's quite as good at is asking like how, so how did it trade higher? Well, in this instance, the profiles have told us that we had this, you know, quick move up, and then we've done a bit of sideways like this, and okay, it looks like a P, and we go, well, okay, in the context of coming off of an important low, what does a P profile mean? And so that's, you know, the extra kind of, well, I suppose you can read that from the candles, but maybe it's not so easy or intuitive. And so then if we go, okay, what does that mean for us? Well, when the market's trading high in a P shape after an offer, so after making a low, the profile suggests that this is due to short covering rather than accumulation of new longs. And so that was, you know, the idea that, well, okay, this is quite an extended accumulation because it's quite a like long, tall P profile. And so then when we had this failure, this kind of completion of the auction to the upside, then you had good conviction that the market should test lower. And so, yeah, I think this was just one of those great examples of this top point here. Like if I'm being really general about it, like what's a profile good for? And I think it's quite good for asking like, how is the market doing what it's doing? You know, is it doing this well? Like what's the kind of mechanism behind it? So that kind of like question to dig into, to ask the quality of what the market's doing and the reason behind it rather than just what is the market doing.
If you find this video interesting, if you want to go deep into the Axia training method and how our trading team of 7-figure traders develop setups and strategies and how they learn to build the most profitable trades across all market environments, then join me in this workshop. Now in this workshop, you're going to learn 3 powerful steps we use to train all our traders on both our London and our Poland trading desks to help build incredible levels of consistency. How to predictably understand which setups work and which don't. You're going to learn our 2 main strategies for how we perfect our trade timing before we enter every single trade. You're going to learn the VEL concept, which is our one and only technique we use to leverage our largest trades. You'll also learn how to avoid trading setups that don't work, how to avoid those large losses, and our main method we use to identify them that saves our traders significant amounts of capital. Finally, you will learn how our traders use the power of network learning to find market patterns quicker than ever before, so you shortcut that learning curve. In the workshop, we want to program your awareness of elite performance, to program your ability to choose the right setups, and program your ability to be a consistent trader. So the trades that you execute become more simple and clearer. And I can tell you this, you'll never see the markets the same again. You'll never look at the markets with a narrow view of getting lost in all the noise and confusion. You'll take your first step towards a deep edge market awareness. I cannot wait for you to join me in this workshop. And I think you're in for a massive paradigm shift in your understanding of how to develop as a trader. So join me by clicking on the top right-hand corner of the screen and sign up for this powerful training workshop, or visit elitetraderworkshop.com.